massive green fireworks across the board. BTC up back at the range high, ETH at the range high, and the US stock market reshaping out of the zone we talked about 2 weeks ago, up 12% currently. What I do now to stay prepared and to profit from a potential massive bullish momentum across the US stock market in today's episode. Let's go. Good morning and welcome, guys. I hope you had a great week so far. Let's start off this video with ETH here. We are back at this range high, and while I expect some kind of reaction from here, I'm not interested in shorting this. I'm very interested in this support and resistance level around the 0.5 or the supply above here. And for my spot-like low leverage position, I will do my first TP around here if I get signs of weakness, or here. But this is actually already my best case target until proven otherwise, because sure, there's now a lot of bullish momentum, and I'm honestly super surprised that that we have this crazy V-shape here in the US stock market. But at the same time, I still hold on to my thesis that the rest of the year is probably not going so well for crypto. But we will see. You can call me a perma bear, whatever, but I was bullish ever since 2022, and I rode the whole bullish swing on all coins, and I did that on ETH last year as well. But looking at the structure, the market has to prove to me that it's going to be bullish again first. And then I will be prepared anyway. But until proven otherwise, looking at what X is launching, those cash tag tickers and all that stuff, and retail now being allowed to day trade with their personal account, even if they don't have more than 25K in their account. All of this just points to the fact that they are creating liquidity from the retail space. And as said, until proven otherwise, I'm looking at lower highs here. And once we do higher highs, I'm still prepared. You see, I'm long. Even though I think we go lower this year, I'm long. And we will see what happens here. I did a TP yesterday on the BTC short, and I did it here around the range high, which you could consider a mistake. But for me, it's just logical because the next 4 days I won't be around my office, because I had some new fresh snow and the weather is fantastic for the next 4 days, and I'm gonna have my last 4 days of lift supported skiing. And so I won't be around my office, and I don't do a lot of work when I'm out there because I just enjoy my life. And whatever happens here, if you roll over from here, I'm still short. And if you go higher from here, I'm looking to short here or here as well. And I just did that because if I can't look at the chart all day, or I don't want to look at the chart all day, because I could definitely, but I don't wanna, and we teleport to the next level, I want to have some funds that I can deploy into the next short. Because as you know, guys, I have my funds on the exchanges very, very small, simply because this is risk management to me. And so the whole position is pretty much the majority of my funds. So I removed something from here, and should we go up here another 12% or maybe 20%, I have some funds ready to deploy in another short, and I don't have to come back home from skiing and being up here and not having TP'd on my short and all that. This is just due to my life situation. And to be honest, guys, here around 15R, doing a TP at 15R is not that bad. And so everything is all right for me here. And now looking at the stock market, as said, I expected some kind of bounce, but I thought we will roll over somewhere in this neighborhood. And I'm a little bit surprised here. And all of those shorts that we talked about over the past few weeks, they all went against me. So if you look at Apple, for example, I have no reason to hide anything, because I can also show you my performance after. And you will see that it doesn't really matter to me, because even though my main bias was wrong at the time, I still ended up with my account net positive. And this is what my whole strategy is about. And this is what I preach every single week. And if you still think, oh, he's bearish, he's a perma bear, and he's not catching the moves, you still don't get it. And that's why I'm completely transparent with it, because there's this picture out there of a trader that's always winning and that is never wrong. And if he's wrong, he's losing money. But this is not the case. If you know how to play your hands, you will still end up making money in the long run, because as said, even though I have a bias, I'm always prepared to be invalidated, and not just invalidated in the sense of my stop loss is hit, but rather like being prepared in the sense of I will end up making money even if I'm wrong. And then once again, I mean, as said, I preach this every single week, but once again, I will show you how. And I did not TP on the Apple short simply because from our perspective, it does make sense and it's a higher time frame swing short. But it went a little bit against me. We will see if I end up break even or not. We talked about the SPX tiny short or the smaller short I had. This one was stopped at break even. I'm gonna keep this one for now, and I'm willing to pay some for that simply to stay prepared. And also Meta, for example, I talked about this area as being the first big test area, and we bounced way more than I expected going against me. But looking at the RR down here, it wasn't so good. And so I decided to not TP. But at the same time, looking now at this whole move, I could have bought a bit more. And this could feel like a mistake. And I definitely say, okay, now looking back, I should have bought more, or I should have TP'd on my shorts more. But now looking back is always a bit easier than looking forward, obviously. And the funny thing is that with my strategy, I will still be able to take longs, even though the market, for example, let's look at the US 100 here again. The market pumped already 10%, right? Around here. And I decided, okay, my main bias was wrong. It went aggressively against me. And instead of sticking my head into the sand, I go through my list. I mean, I have a big list of stocks here with different sectors. And I know some of them are super volatile. They're momentum stocks. So as soon as the market turns green, those stocks usually gain a lot of traction, especially if they are pretty undervalued for a prolonged time and they are in demand. And then you have the momentum shift, my usual strategy, guys, you know what it's about. And you see, I entered here 2 days ago on Monday because I said, okay, I want to be prepared for more momentum. It's way more bullish momentum than I expected. So what can I do? I look for those momentum stocks that usually gain traction once the market confirmed that it's bullish. It's not, I could have bought here at the perfect bottom, but this is, on those stocks, it can be a bit dangerous because if the whole market is not confirming bullish momentum, this stock will probably just roll over. And so I wait for the confirmation. We broke this trend line. You could also draw one here. We broke this and I entered here and I have a clear invalidation below this low. And this happened on the 13th, on Monday, I entered, and this is here. So this is where you do not enter this anymore based on premium and discount rules, right? If you're not the momentum trader, you don't enter this because it's already overextended. But Rigetti here, it's still undervalued. I have a clean validation and potential if it goes up here, it's 9R. But let's say we just go up here, it's still already 5R. And this is why it's so beautiful, because I entered and I knew if the momentum is coming back, something like this will happen, and it's up 15% within 2 days. And the same thing is happening here, QBT. It's pretty much the same idea, same sector. You see how the chart looks pretty much very, very similar. Offers a different hour, but offers also a little bit of diversification in the same sector. So don't get me wrong, it's not a completely different idea. But again, here, potentially 100% move into the 0.5. And these are two of my favorite momentum plays. They work out great for me. I also shared Novo Nordisk. And guys, by the way, if you're only watching my videos, I just have to say this because I'm always coming around and saying, oh yeah, I shared this, I shared that. Obviously, I don't make a video every single day, and I sometimes take a trade every single day. And for that, check out my Discord. The link is in the description. It's all free. First of all, I shared this yesterday that if trade momentum is continuing higher, I will dig out more high volatile assets. And even here, Novo Nordisk and all them, in the TradFi section, you see I share them all live if I take them. How I handle the SPX, how does break even, Rigetti, take two. All my setups I take, and all the setups I usually say I shared them beforehand. You will find them here. Sometimes I also share them live in the video if the day aligns when I execute, but most of the time I do not record a video every single day, and so most of the time I will just share them here because it's so much easier. And also I do it here and not on Twitter because I can structure my whole ideas so much better. Having those threads here is super effective in sorting them. And this is pretty much also my public data journal where I share all my plays here, Microsoft asset, also undervalued here if if momentum is kicking in. I can show you what I mean by that. So Microsoft, ever since I entered, around 3-4% up or something. So here 4% up, and it's very simple because I do not enter the US 100 because it's overextended. I look for setups that will profit from this move while being still undervalued, while still aligning with my system. And for that, I don't need to time the exact bottom. As said, also here, I entered on Monday, probably. Yeah. And this is not like the perfect bottom, but I can use the perfect bottom here to protect my stop loss and to have a clear invalidation. It's always the same, guys, and it's not that hard, and it's just being mental flexible. Not being too bullish down here was a mistake. I admit that, and I would be surprised if I would be right all the time. But you see how I still ended up making money. And in general, I share my performance here, by the way, also on a monthly basis. One account suffered a bit, but I TP'd yesterday on this, and it's now at 120% plus. I can show you that. And this is my monthly performance on my TradFi account. You see how I was wrong on my main buys, and you see how in April I paid a little bit of those unrealized gains back. But in general, the month ended still positive for me, even though my main bias was wrong. And this is the power of hedging. And this is the power of taking all those different positions at the right time. And also, for example, here, Palantir, I took this short here, and it went down regardless of what the US 100 did. So if you look at Palantir, let me pull it up. Palantir here, you see, I ended up TPing 60% down here, and we bottomed into the 10th of April here, while the US 100 was already going up. So even though I say this is a proxy to the US tech sector, this stock went down. And this is the beauty of the stock market, because if you take a crypto position, you take, for example, a long on BTC and a long on ETH, the chances are probably 90% that they will move in unison. And if one is going down, the other one is going down, and it's going against you. And in this case, all my positions went against me. And even this one is also US tech stock. It went into my TP at the same time. And this is the reason why my performance, for example, also, no, this is the crypto account, why my performance still ended up being positive. It's not super spectacular for this month, but it's in general, it's positive, even though my main bias was wrong. And this is the beauty of hedging. This is what I always mean by don't treat a single position like it's a single position. Treat them all as one big play. It's like a chess game, and one move is not necessarily leading you to a win. One move might be a sacrifice in order to stay prepared, in order to plan moves ahead. And this is what hedging means. This is what a real strategy on higher time frame means. And you see here on the BitCat account, which I showed the monthly performance just right before, I did a 40% TP on the BTC short, and now the account is up 115% in just 7 days. This is because it's just showing realized gains, and I paid some funding fees over the past month, and I did not really take any higher time frame positions. And this BT short is making 95% of this account right now. And so obviously if I move funds from this position, the account will move, the percentage, the P&L of this account will move a lot. And I'm showing those numbers not because I want to brag, because for those that understand those numbers, it's not bragging anyway. It's just showing, first of all, what is possible with a minimal amount of trades, because look at this. It's just one single position I hold for several months now, pretty much since last year, Q4. And this is just the profits I realized yesterday. You see what I mean? It's one position if you know how to use leverage, if you know what this number really means, and it's one position. It's minimal effort, maximum result, and I'm sharing those things to prove that I'm a profitable trader, to show you what's possible with a minimal time effort if you know how to trade on higher time frames properly. People are so busy taking thousands of trades on lower time frame while not even profitable on the higher time frame. And I will not flash any big numbers, any big dollar numbers, first of all, because these numbers are private. And you will see a lot of people sharing big flashy numbers, big dollar amounts, oftentimes just from some prop firm accounts where you don't even know if this account is funded or not. people have several accounts there. You never know if it's funded or if they just buy an account just to make it look flashy and big, and they over risk for this one position so it looks super big, because in reality they're mainly selling their product. And they're also, think about it, if it's a 100K account and somebody is making $1,000, it sounds a lot, but it's just 1%. And this all matters. So for me, the percentage amount is what counts. The monthly percentage performance is what counts. And based on that, it's not important how much dollar you make. It should not be important, especially not in the beginning. Focus on the percent. And as said, I'm not showing this to brag. I'm showing this to that you guys see what's really realistic. And you will not see a lot of traders who are that transparent about that. And actually, it's harming me and my business I want to build here, because I will definitely not attract all those newbies who think they're going to be rich with trading real quick, because this is the reality. You have outperformance month. I had months where I made 20% a month. I have also on this account, as I showed, this was 10% up when I shared this on the 10th. And now yesterday, it's up 18%. So trust me, I'm making my money here, but at the same time, I'm harming myself a little bit with that, because the beginners don't want to hear that it's that 5-10% a month is sustainable. 5 to 10% a month is a lot. And this is because if your account is small, 10% will not feel like a lot, obviously, in dollar amounts. But look around. You will not find traders that can consistently share a P&L that's more than 10%. At least I have not seen it. It's already exceptional performance. Sure, you have outlier months. I can show you some month where I made 20-25%, but it averages out over the year. Now this month was not super highly profitable, but at the same time, if I consistently sustain this positive performance per month, plus those outlier months. So let's imagine momentum really kicks in and I have those really outperforming here, and let's imagine it goes to my best case target, which will most likely not happen, but let's imagine this happens and I risk 0.75%. A 10-hour trade is already 7.5% with this one single position, but I took two, which is 1.5%, so overall risk. So these two positions, if they go to a 10-hour potentially, they already add 15% to my account. Just those two positions. And if this kind of momentum really kicks in, it will not just be those two positions who will print. And these are the months who average out over the year to be a 10% a month performance. And it's so important to have realistic targets, and people don't have realistic targets. They take trades based on, I want to make so much money with this trade. I want to make so much money with this trade. Think long-term, plan ahead, build a percentage goal you can achieve consistently. So for example, I could beat myself up that I don't reach my 10% goal. But last year in 3 months, I made 60%, even 70 at the high of my portfolio. But with momentum trading, you don't realize all of those at the top. What I want to say is I could beat myself up for not reaching this goal, but I know that there will be other months which average out this, and then I will reach my average performance. I can also show you how my account looked last month. I reached 10% here, I reached 17% here, and it fluctuates because it's not always about realized gains. For example, the BitGet account here is realized gains, total ROI for this month. You see, in general, I'm profitable, and in general, I always come close to my goals, but some months are better, some months are worse. In general, it works out super well for me, and I'm telling you, it's not that hard. And as said, I'm not sharing this to brag. I'm sharing this to see what's possible and what's realistic. And everybody else who's claiming they perform so and so much, or they just show flashy numbers of unconfirmed accounts, which are maybe prop firm accounts, maybe even demo accounts, you never know. And you can just over risk on a few positions, and then your performance looks like insane dollar-wise. But by the way, I've seen videos of guys and they have hundreds of thousands of clicks, and they show their Lambos and Bugattis and blah. But if you look at their trading, first of all, the technical analysis, it's something else for everybody. So I don't want to say it doesn't work what they do, but the accounts they use, everybody can pull up, like everybody can create demo accounts without real funds and then just over risk it 100 times and a few of those plays play out, and then their account looks like super profitable, but in the end they never risk anything at all, really. This is the big difference. Some people just show flashy numbers, some people just sell unrealistic expectations, and I try to do neither of that by really being transparent and honest about my numbers. And I know it's gonna harm me because it will not attract beginners, it will not attract the people who still dream they're gonna be rich quick with trading. But that's okay, I'm not talking to those people. Just to sum it up real quick, trading is a exponential profession. When you learn to think in percent and when you learn to think in probabilities, it's an exponential profession where you can make unlimited amounts of money because there is no real financial roof. There's billions of dollars floating around, and you becoming a trader does not mean you're gonna get rich quick. You place yourself in a position where you are able to make this. The highest rate of millionaires made comes from the stock market. Why? Not because everybody gets rich with trading, but because there's the potential to get rich. And if you're not placed in an industry where there's potential to have exponential gains without a financial roof, the chances are limited. And when you enter the stock market, and especially with brain and with a system and with realistic expectations and understand how compounding and all of that works, you position yourself in the highest likelihood place of becoming a millionaire in your life. And this is probabilistic thinking, and this is why it's important to have realistic percentage goals and understand compounding. We also talked about Take Two. Let me check that real quick. Take Two here. Gaming company, GTA, you know the deal. GTA is the most sold game, and it will probably be the most sold game again. The whole thing came down 30%. In the bigger scheme of things, it's not that optimal here. So I treat this more as a short-term, not highly optimal position. But first of all, look at those wicks on the 12-hour. Look at those wicks here. And then if you go on the daily, you don't see any wicks anymore. Funny, isn't it? Pre and aftermarket, important stuff as well. And if you're lower than the daily, you will see that. If you have your settings here on extended trading hours on session, this is important. If you go lower than daily, you need to have this at extended trading hours because otherwise you don't see pre and aftermarket. And as you see, sometimes there's a lot going on in the pre and aftermarket. But what I really want to say is about this one, it's interesting because it's a global player. They are very profitable. And this year, GTA 6 is probably launching, and it's going to be a global event. I mean, look at how many views the trailer got. The last time I checked, half a year ago, it was 200, 300 million or something. So they're going to sell a lot of copies of this game. And more important than what they really sell and what they really do is the hype and the expectations. And for example, if you look at the past, those trailers usually come around June, July, they launch some new informations, whatever. This could short-term speaking lead to a little more hype, maybe pumping into this. It's nothing super spectacular, it's not a highly volatile stock, but the thing is, if this is playing out, I ending up TPing 50, 60, 70% somewhere in this neighborhood or maybe here, and I can keep the rest like I always do. I have some investment exposure into this company, and if they gain a lot of traction this year because of the launch, I'm exposed. If this is a sell the news event, I'm profitable already. I TP'd on my position, and at the same time, I will end up break even with the rest, worst case. And you see me doing that. If you follow me for a while, you will see me doing that all the time. If you take Moderna, for example, I said there is absorption. I TP'd 85%, and this is totally fine for me, even though we are in higher time from discount still. 100% move into my 85% TP is something that's totally reasonable. So there is it's definitely all right to TP here. And even though the stock might go higher, I still have those 15%, which is still considerable size after such a move for potential even higher targets. But the thing is, with those stocks, they can also just come back to this and keep accumulating for another year or two. And do you really want to round trip 100% move just because you think it's going to go higher? Because you don't know, you cannot know. And if it goes higher, I'm exposed. If it goes lower, I use some of those profits down here to accumulate even a bit more again. And maybe it needs some more time. Maybe it goes there right away. Time will tell. And once again, I'm prepared. And I don't need to bet everything onto one hand. Now back at BTC and the crypto market in general. As said, call me a perma bear, but I think there's a lot of liquidity forming below those lows, and I wouldn't be surprised to take them in a very quick and violent manner at some point. This does not mean we cannot go up here or even up here and then nuke lower. I say up here, the chances of up here are not as high as here. I see a very good chance that we gonna go and fill this, taking 80k again, making everybody super bullish once again. I think the chances rose because we are back at this range high, and I would not be surprised to see this push higher. But at the same time, for me, it's also not a surprise if we just reject here and then go lower. Probably if you trade this range on lower time frames, you'll probably reject a little bit here, going back down here, maybe even here, and then pumping higher. This is at least how price usually behaves. But this is not what I'm aiming for. This is not what I trade and how I trade, especially right now when I don't have so much time to spend in my office. And so my main idea is right now that we do something like this. Maybe I take my short here if I get my entry signal, and then do something like this. And should we really take this level here and go higher after, I can reevaluate my whole idea here, maybe for taking a short here. But these are pretty much my most likely outcomes right now. But eventually we will take this liquidity, even if it's a higher time frame reversal. Let's assume this is really the bear market bottom, which I don't really think, but let's assume it is. Then look at the structure. Do you think those unprotected lows all go away unpunished? I say it from a liquidity perspective, it's much more likely that we at least sweep this low one time if it's a very high time frame reversal, and then from there go higher. But as said, looking at the great scheme of things, I think this is just another bullish channel on the way down, attracting as much liquidity as they can to offload, to trap people, and then continuing lower. But time will tell. I could be wrong on this, and as you guys know, I will profit either way. That said, have an amazing week. We talk next time. Bye.